Thank you for the very kind introduction, Peter, though my erstwhile employers, Capital One, would cringe at the thought of being called a traditional bank, but we'll leave that aside. I actually wanted to start by thanking Imran for not just a fantastic presentation, but the great work he and his team are doing in driving open banking forward. Because what they're doing, in a sense, is making banking give back to customers what should always have been the customers. That is access to their own data and the ability for them to interact with their money the way they would like to. And for that, I think they deserve a great thank from everybody in this room, but also from the general UK customer. So thank you, Imran. And let me reflect a little bit on why is that important. It's important because the UK customer, actually probably globally, customers are generally fed up with their banks. And banks, often despite their best intentions, are struggling to make it better. Reminds me of an anecdote when actually I was a kid growing up in India. I'd often go with my mother to withdraw money from the bank, and these banks were state-owned. So you had this little window between 11 and 3 that you had to show up. And of course, there was a lunch hour in between as well to get your money out. And I was a bit baffled, and I said, I asked my mother, why do we have to come here at a time that's convenient for them and stand in line for about 30 minutes to get our money out? And my mother patiently explained, the cash comes in the vans in the morning. They have to kind of sort it all together, so they can't really open early in the morning. And they have to shut early because they have to make sure everything adds up, not too much money was given up or too little money was given out, and so on and so forth. All made sense. But fundamentally, when you look under the hood a little bit, it's really the customers working around the bank's convenience. Now, thank God for technology that things have been made a little bit easier for us now. But the fundamental ethos hasn't still changed. Banks, in trying to solve very important problems like compliance, AML, know your customer, risk management, all very critical problems, design solutions, look at some of the best technology they can use, design processes and design products that actually work for them. And if in that, the customer experience gets improved, that's an interesting side effect, right? And anybody who recently might have had to go through a KYC process or a source of funds process or an onboarding process would realize that it has actually become increasingly difficult. We just went through trying to open a bank account. We've been around for 12 years, and yet it took us about 6 weeks as Zopa to open a bank account. So what needs to change, right? The thing is, it's not rocket science. It's not even new. Steve Jobs said this about technology in the 90s. I think Jeff Bezos said it about retailing in the noughties. And I think it's time that banking faced up to it. As simple, not new, is start with the customer. Understand what they want, and work backwards from there to design your products and services. Let's not look at what's good for us as financial services institutions, but let's look at what's good for the customer and start from there. And that's my talk about. So next generation bank, starting with the customer. So for the next 15 minutes or so, what I'm going to do is talk a little bit about what does the customer want. Let's start there. What does the customer want? And what is stopping them from getting that? And then let's talk about, so what does a bank look like that actually delivers that consistently? And lastly, look at the capabilities that a bank like that would need to deliver that value proposition. So starting with, what does the customer want? There have been many surveys done, and most of them come back with pretty consistent results. They want to be treated fairly, very natural human need. They want an intuitive, some might say frictionless experience. And they want to make sure that their money is safe. So when they're not looking, somebody else, a fraudster, is not taking away their money or data, and the banks themselves are not doing anything naughty. And that's 3 simple needs that customers have when they think about their financial services provider. Starting with fairness. Let's start there. What is fairness? I think fairness is not just doing what you said you're going to do. In fact, most banks actually consistently are able to do that they will say this is what we're going to do, and they act on it. Fairness is fundamentally doing the right thing, and that's slightly different. Fairness is also a two-sided street. The customer needs to feel that what has happened to them is fair. Now, let me talk about two markets with the customer. These are two big consumer markets that Zopa wants to focus on, and where the customer feels that what's happening is not fair. Starting with credit cards, the space where I've spent 12 years. If you are a customer today and have a reasonable credit history, you can go and find a 0% offer for more than 3 years. That seems like a great deal, right? But is it? If you ask customers, and we ask customers, how many of them expect to pay interest on that 0%? And it's less than 10%. Then what ends up actually happening? More than half actually end up paying interest on this kind of a product. About 80% don't really understand the product. So while the banks probably would have done exactly what they said they're going to do, and they might have even warned the customers through a letter that probably they didn't read, the customers end up feeling that they have been unfairly treated, right? And that sets up an adversarial relationship, which is not great for trust, and it's not great for the customer feeling that they have been fairly treated. The same applies to savings. Another product where you start slightly different. You start high, you get higher interest rates, and then it's cut. The FCA did a study which said if you're a customer with a bank less than 2 years, what's the interest rate you get? Reasonable. And if you've been a customer with a bank for more than 5 years, what's the interest rate you get? Not so reasonable. In effect, banks are taking advantage of customer inertia to make money. And that, again, more than 2/3 of the customers don't feel that's fair. Banks are doing exactly what they said they're going to do, but the fundamental business model itself is flawed. So that's fairness for you. Now let's talk a little bit about experience. And we think of Net Promoter Score, which is how likely are you to recommend a bank, as a good barometer of what the customers think their experience is. And that's consistently weak in the sector. We at Zopa are proud of our Net Promoter Score. It actually beats most of the tech companies, but we'd like it to be in the 80s. But why is it this bad? Is it because banks don't care? No, banks try. Banks try to make this better. And recently a survey was done among the banks on what stops them from delivering a great customer experience. And the answers are very interesting. It's their technology, systems, organizational structure, lack of data. Now, these issues aren't peripheral to an organization. The technology, the structure, the way they look at the data, that's the DNA of an organization. So for them to go and change that takes a lot of effort. It's really almost redesigning the organization from start. So it's no wonder that banks find it hard to deliver a consistently great experience and change. Because it's what they're trying to do from where they are starting is not easy. And the combination of this means there's an erosion of trust. And when there is an erosion of trust, customers don't feel safe. And customers don't feel safe, and that means that some well-meaning initiatives that the bank have driven, like using fingerprinting instead of passwords, far safer. Customers don't trust it because they've just been set up not to trust the bank. And that means the security of their data, the security of their money continues to decline. And we feel that and most data indicates that almost 1/3 of our customers are going to be a victim of bank fraud. And this is despite banks trying to help customers with better interfaces, with better technology. So to recap, customers don't feel fairly treated because the business model is somewhat flawed. Their experience is poor because it's very hard for banks, given their structure, to deliver that. And the combination of that and continuing cybersecurity means they don't feel safe. So how do we change that? And again, the answer comes back to start with the customer. The most fundamental thing, and this is the most important thing, if we get this wrong, then nothing else matters, is that your business model has to be one where you win when the customers win. Most financial services products are both designed and consumed in a fashion as if it was a zero-sum game. If the customer saved some money, the bank must have lost out. If the bank made some money, the customer is out of pocket. But it didn't need to be like that. If you think about this, particularly in the longer term, a customer who's making more rational choices with their money, a customer who's in control of their finances, a customer who can lower their debt servicing costs, over the longer period of time, will be far more creditworthy, can afford a far bigger mortgage, for example, will have far more spending power, and thus the banks will make far more money out of them over the longer term. So if you can set up the business model in such a way with simple and transparent products that the customer understands, then you're aligning your interest with that of the customer. And that means that you're building the foundations for a trusting and long-lasting relationship. And lastly, finances are intensely personal. It's one of those things where we probably don't even share the entire detail with our partners. And yet, we do share it with the banks. And what we get back is a very depersonalized service. It's probably one of the most depersonalized service offering you get back from the banks. Now, we all understand that in today's day and age, the neighborhood bank manager who understood you and could talk to you about your finances in a deeply personal way is not possible, right? And we have to thus deliver it with technology and with great data insight. Now, Google knows that I'm unfortunate enough or have the bad judgment to support Arsenal. I've never told that to Google, but it just knows. And it tells me every time they lose. And the banks need to do the same thing. Not know about the football club, but figure out what customers' finances look like. Use advanced AI, data analytics technology, to give a more personalized interaction, to give more insight that's relevant for the customer. And that will then make the customer feel safer, because they feel this institution knows me, and thus feel more secure in dealing with the banks and be able to actually rebuild that trust. And that's what Zopa Bank is looking to do as it launches. First of all, products. As we said, the fundamental thing is about creating a business model that's win-win. We already believe we have those products in the personal loan space, in our investment space, which are products that are hugely popular, and we continue to grow our customer base there. But let me talk about a few other products where we are choosing to be different from the market. Credit cards. We will not have a long 0% introductory offer. Instead, we'll have a low flat rate, where our interest is aligned with that of the customer. Savings. We'll take the same pricing principle we've always had for our investment products, which is that a new customer and an existing customer gets the same rate, always. There is no price differentiation. And if you ever have to choose between one and the other, if you have to ever choose between treating our current customers better versus getting even more new customers, we will prioritize our existing customers, just like we do today on the investment side. And all this will be delivered through a customer experience that we have created that have won multiple awards, both in terms of customers actually voting for us, as well as reputable third-party industry bodies giving us the awards. And lastly, relevant to our earlier conversation, we want to embrace open banking. We're already working very closely with Imran and his team to really give more meaningful insight back to the customer and enable them to get control of their finances. That's what we believe Zopa Bank should look like at launch. So now let me talk about, now that I've talked about what a bank needs to look like to actually build that, to give customers what they want, now let me speak a little bit about the capabilities we feel it requires to actually create a bank like this. And the first, and this is table stakes, is that you need to have strong sector-specific expertise. You need to know how money works. You need to know how to create these products. You need to know how to originate customers. You need to know how to manage risk. You need to know why things go wrong. And when things go wrong, as they invariably would, what do you do in response? This is not something, unfortunately, that you can buy very quickly. It takes time. It takes experience. And Zopa has been doing that for the last 12 years. We're growing profitably. And in doing so, we've delivered predictable returns to our investors, and we've kept our pricing competitive for our borrowers. And that's experience that we believe will stand us in good stead as we look to launch our new bank. The second is customer obsession. People call it customer focus. We want to take it another level, and we say customer obsession. You need to consistently listen to your customers, hear what they're saying, actually do testing, because sometimes what they say, their stated preference, is different from their revealed preference. So you really need to understand how they're behaving. And you need to turn all of that into great insight that you give back to the customer, but also use that to create a compelling experience. Now, a lot of people talk about, that our company is customer-focused. One of the tests I use is, and you could use in your firms, is to really ask yourself, when was the last time I fundamentally changed my product design or my user interface because I actually did find out something new in my testing? When was the last time I made a choice that actually hurt the P&L in the shorter term, knowing that what we were doing was building a more sustainable franchise in the longer term? And if you can't remember the last time you did that, or if the answer is something you can count on your two hands, then you're probably not customer obsessed enough. Next is talent. Again, something people talk a lot about. To create a financial services product that's going to be delivered digitally with a compelling customer experience requires talent that is multidisciplinary. And then you need to bring that together and make them work together. Right? At Zopa, we fundamentally believe that the only competitive advantage we have is our people. So we take this very seriously. We work very hard to get our people in, but once we have them, we make sure that they work together. A lot of companies talk about cross-functional teams coming together to solve problems. For us, cross-functional working is a way of life. Our teams are always cross-functional, and they don't own problems. They own business areas. And they work together. By that, I mean a developer, a risk analyst, a marketer, a copywriter, a compliance expert, all together in what we call a tribe, working for a single person for periods of a year or year and a half, focused on a particular area, a particular customer area, and improving that over a period of time. And that structure not only has produced great results, but also produces a great sense of ownership for everybody working on it, because they can see end-to-end what the problem was, how the ideation was around creating the problem solution, and actually delivering the solution, and then what happened, and how do you iterate on that to make it even and even better. And that, for us, delivers some great employee satisfaction figures. Those are our Glassdoor reviews. Google is a decimal point ahead, but we still don't have a running track and all the free food. So maybe once we have that, we'll go ahead of them. And lastly, control of the technology stack. Now, if you would have asked me a year ago when we started on this journey of wanting to launch a bank, I might not have put this slide here. We always knew that the technology stack is an incredibly important part, an integral part of what a bank needs to do, because that's where your products are designed and delivered. And increasingly, in fact, for us, all your customer experience is delivered through your technology stack. So it's important that you have something that works all the time, because you're dealing with money. 2, is cheap, because you're competing with banks with scale, and that you want to make sure that your operating model is lean. And 3, is reliable. By reliable, what I mean is not that it works all the time, but if you put in 1 million transactions through it, you want to make sure that every time the same result comes out, right? And when we scanned the market, what we found is that the providers can be divided into 2 buckets. There's bucket 1, where they have been around for a long time. The systems are a bit old, but they are reliable in the sense they work the way they're designed to. They've seen through the edge cases, it works. Unfortunately, they're very expensive, particularly for some of the smaller institutions. And 2, they're very rigid. Changing them is still working through waterfall and still mostly COBOL programmed. Then you have a second set of providers who are new and evolving, and they are relatively inexpensive, very agile, but haven't thought through all the edge cases when you have hundreds of thousands or millions of customers interacting with your product, what happens. And that, in turn, turns into a bad customer experience, because money doesn't always get added up properly in some of those newer systems. Now, I'm sure over a period of time, some of those better providers there will come to a place where companies like us feel comfortable using them. But right now, I feel, for someone like us, we have to own our technology stack to really deliver a consistent experience that we can be proud of. And Zopa today does that. This year, we made more than 3,000 software releases. So that's many more than once a day. According to Deloitte, our operating costs are about half of that of most banks when they are servicing the same products. And the systems are almost always work. And that's because we believe we are able to do that because we control our technology stack, and we feel that's important for us to do in the future as well. So to wrap up, if you start with a bank that has those capabilities that I talked about, a business model, strong fundamentals in finance, customer session, great talent, and control of the technology stack, then you can create a business model that has products aligned with the customer. You can create an experience that wins your awards, and you can enable your customer to get in control of their finances. And that then will deliver what customers want: fairness, intuitive experience, and security. I want to end now with just a reflection of, we all realize that customers are dissatisfied, they're disengaged. But I want to just reflect a little bit on some sobering statistics of what that dissatisfaction, what that disengagement ends up leading to in today's UK economy. About 40% of UK customers experience stress and anxiety due to financial difficulties. They feel so because they are not in control of their finances. Let alone being in control, a lot of them don't understand their finances. 20%, 1 in 5, cannot read something that's as integral to your finances as a bank statement. Right? And all this means that more than 4 to 5 million UK customers every year enter severe financial difficulty, impact their credit, have negative impacts on their credit history, which means damages their employment prospects in the longer term, damages their ability to access credit, and get financially excluded. And that's a huge cost to them, and it's a huge cost to the economy. And because of the adversarial relationship they feel today exists with their financial services provider, only 20% believe that they can go to their bank and get unbiased advice. So the provider who best understands them, who should be able to find the right solutions, the customers don't trust they can go to them and ask for help. And we all can stand here and say, blame tough economic conditions. We can say it's rising inequality, wages are not rising, the customer is unengaged, and that's why all this happens. But in our hearts, we all know that we share a lot of this responsibility. Because historically, when we should have simplified, we have instead chosen to create complexity and obfuscate in front of the customer. When we should have educated, we have instead taken advantage of customer inertia. When we should have intervened, we've instead let customers fall into unsustainable debt. We, as the alternate finance industry, as this conference is often loved to call us, have the option of actually creating a real alternative. We can choose to build trust. We can choose to enable customers to make better choices with their money, empower them to get in control of their finances, and really change the narrative. Thank you.
Thanks, Jaidev. We have probably time for probably one question. We have some mic runners in the room. Does anybody have a question? Down the front here, where is the mic runners? Here we go. Please wait for the microphone.
Thank you. Quick introduction, Kaiser Naseem. I am from the International Finance Corporation. A lot of questions, but I'll just ask you two. One is, what type of license do you have that you operate on? And the second one is that I assume from what you said that you are a bank. So how do you propose to scale your banking activities? Because you have your own platform, right? You're not leveraging anything. Thank you.
So currently, we are not a bank yet. We are what's called a peer-to-peer provider. So as a part of that, we are a consumer lender, and we can take retail money to actually lend to consumers. So it's a marketplace that actually takes money from individuals or institutions and lends out to customers. And we're fully regulated as a consumer lender in the UK. We're in the process of acquiring a banking license. It's a 2-year process. We're about halfway through that. In terms of scaling the business, we have been scaling our kind of consumer lending proposition pretty successfully over the last few years. In the last 5 years, we've hit annual growth rates of 60% or so, both in terms of revenues and in terms of lending volumes. We today lend about £1 billion a year this year. And as we kind of build more products, we believe that we'll use our digital capabilities in terms of originating customers to continue to scale. And things like open banking, things like a more secular movement, more towards digital products and digital access for customers is only going to help us even more in the future.
Okay. Thanks, Jaidev.
Thank you.
Okay, thanks, man.